Did you know that 90% of individual investors lose money over the long term? That's right, most people don't come out ahead in the stock market. But there's a powerful strategy that goes against the crowd and has a proven track record of success: value investing. The idea is simple: buy undervalued companies, hold them for the long term, and let time do its work. Yet, very few investors know how to truly tap into this strategy. Here's a shocking fact. From 2000 to 2020, the S&P 500 had an average annual return of 6.2%. Meanwhile, value investors, those who focus on finding companies with strong fundamentals but low market prices, outperformed the market by 3% each year. That's a huge difference. In this video, we'll show you how value investing works, step by step. You'll discover the power of patience, how to spot hidden opportunities, and why going against the crowd can actually lead to bigger profits. So, if you're ready to unlock the secrets of building long-term wealth with smart, simple strategies, keep watching. Chapter 1. The Art of Patience. Why value investors are the masters of time. In the fast-paced world of investing, it's easy to get swept up by the latest trends. But value investing? Well, it's a whole different ballgame. While others are chasing after quick returns, value investors take the long route, believing that time is their best ally. Warren Buffett, one of the most successful investors ever, once said, "Our favorite holding period is forever." What does this mean? Simple. Buy solid companies at a good price, hold on tight, and let time work its magic. Value investors don't just jump on the latest bandwagon. Instead, they seek companies that are undervalued in the market but have solid fundamentals. These companies are like diamonds in the rough. They don't always shine immediately, but with time, they reveal their worth. This patience doesn't just pay off financially, it teaches you a deep appreciation for long-term planning and resilience. Imagine this. The average holding period of a stock in the US market has dropped from 8 years in 1960 to just 6 months in 2020. But value investors aren't concerned with this short-term thinking. By staying patient, they often end up with greater returns as they ride out the ups and downs of the market. So, next time you're thinking about flipping a stock, remember that time can be your greatest asset. Chapter 2. Unlocking the True Value. How to see what others miss. A common misconception about investing is that you need to follow the crowd. But what if the crowd is wrong? Value investing is all about discovering hidden gems that others have overlooked. Think of it like treasure hunting. The secret? Finding stocks that are undervalued by the market and waiting for their true potential to be realized. Take Coca-Cola as an example. Back in the 1980s, Coca-Cola was undervalued compared to its earnings potential. Buffett saw the value, grabbed the stock, and let it grow into one of his biggest successes. But how can you find these hidden opportunities? Start by analyzing the company's fundamentals, earnings, revenue, and debt. Don't just follow the hype, look for the real worth under the surface. You'll want to dive into a company's financial statements to assess its intrinsic value. Intrinsic value is essentially the real worth of a company, factoring in everything from assets to growth potential. When you spot discrepancies between market prices and intrinsic value, you've found an opportunity that many investors have missed. Chapter 3. Margin of Safety. The cushion that protects you from market storms. In value investing, one key principle stands out: the margin of safety. This concept, popularized by Benjamin Graham, often called the father of value investing, is essentially a buffer between the price you pay for a stock and its true value. Think of it like buying a house at a deep discount. Even if the house's value drops slightly, you still got a good deal. Buffett has frequently mentioned the importance of this margin of safety. Price is what you pay, value is what you get, he often says. By buying stocks with a significant margin of safety, investors ensure that their risk is minimized. This isn't about avoiding risk altogether, it's about managing it wisely. A 2020 study revealed that investors who focused on buying stocks with a large margin of safety outperformed the broader market by over 5% annually. It's like taking a cautious step forward while everyone else is sprinting. The trick is knowing the true value of a company and waiting for the market to catch up. If you're finding this helpful, don't forget to hit the subscribe button. Chapter 4. The Power of Compounding. Let your money work for you. Compounding is a simple yet incredibly powerful tool in value investing. It's the process of earning returns on your initial investment, then earning returns on those returns. Albert Einstein is rumored to have called compounding the eighth wonder of the world. Whether or not he said that, the concept holds true. Compounding can turn a small, steady investment into a fortune over time. Buffett often emphasizes the importance of compounding. One of his famous quotes is, "The stock market is a device for transferring money from the impatient to the patient." The longer you hold onto a value investment, the more your initial investment grows. For example, if you invest $1,000 at an annual return of 7%, after 10 years, your investment would grow to $1,967. But over 30 years, it would become $7,612. The longer you stay invested, the more your money compounds, and the bigger your returns. Chapter 5. Financial Health. How to spot a strong business before the crowd does. A company's financial health is crucial to its ability to grow and sustain profits. In value investing, one of the most important aspects is understanding a company's balance sheet. While the stock price fluctuates based on market sentiment, the financial health of a business is more stable. Start by looking at metrics like the debt-to-equity ratio. A high ratio might indicate a company is too reliant on debt, which could spell trouble in tough times. On the other hand, companies with low debt levels and high cash flow tend to be more stable. Take Apple, for example. Despite being a tech company in a volatile market, Apple's strong cash reserves and low debt levels have allowed it to weather economic storms. Understanding a company's financial position before making an investment is essential in minimizing risk and increasing your chances of success. Chapter 6. Contrarian Thinking. Going against the grain for bigger gains. Value investors are often labeled as contrarians, and for good reason. While others are selling, they're buying. While everyone else is celebrating a hot new stock, they're focusing on overlooked, undervalued companies. This contrarian approach has led to some of the most successful investments in history. Think of it this way: when everyone's excited about a stock, its price is usually inflated. But when others are fearful, the price tends to dip below its true value. That's when the contrarian investor steps in, buying up stocks that are unfairly punished by the market. In the late 1990s, many investors believed that traditional industries like railroads were dead. However, Buffett saw an opportunity and invested in companies like Burlington Northern Santa Fe, which has grown significantly in value since then. By thinking independently and ignoring the crowd, value investors can often identify great opportunities before they become mainstream. In conclusion, value investing isn't about riding the latest market wave or following the trends. It's about patience, finding hidden gems, managing risk, leveraging compounding, analyzing financial health, and thinking contrarian. These strategies have stood the test of time and helped investors build wealth, often in the most unlikely of places. If you want to master value investing, it's all about taking a step back and letting the principles guide you. It's not easy, but the rewards are worth the wait. Thanks for watching. Be sure to subscribe to stay updated on all our latest videos and tips on value investing.